Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, thank you for coming on today.
Good afternoon, Devin.
Well, today, as expected, the Bank of Korea decided unanimously, as it turns out, to keep its key interest rate where it is at a historic low of 0.5%. It's where it's been since last July. So tell us about that and how long you think that'll remain the case.
As widely expected from market, Bank of Korea maintained the benchmark interest rate at 0.5% today. Actually, leaving the key interest rate at 0.5% level would be the only available option to Bank of Korea as of now. Inflation pressure is slightly intensified recently, as we have seen previous report of oil price increase. But the central bank can't adjust interest rate because yesterday U.S. Fed Chairman Powell clearly confirmed his expansionary monetary policy with both of zero interest rate and ample liquidity supply. All these mean that Bank of Korea will leave interest at 0.5% level until U.S. Fed begins to adjust its key interest rate in 2023.
And now the BOK is also keeping its GDP growth outlook for this year at 3%, but it's raising its outlook for inflation to 1.3%. So what do you make of these projections, Professor?
Bank of Korea's economic growth forecast for this year is maintained at 3%, which is the same as previous forecast released in November last year. If we take a look at domestic economic situation, increasing export is helping to recover economy, but still domestic consumption, which covers 60% of GDP, is still weak with negative growth. Also, oil price, other natural resources price, and agricultural product prices are all increasing quickly from the end of last year. So it is why Bank of Korea raised the inflation forecast by 0.3% up to 1.3% on annual basis.
And turning to the markets, stocks on Wall Street had a nice bounce back overnight, the first major movement we've seen in that direction for a few sessions. Fed Chair Powell easing some concerns about inflation with his testimony. What's the story there on Wall Street?
U.S. stock turned higher Wednesday after Fed Chairman Powell signaled that the Fed is not about to change its monetary policy, and that helped push the Dow Jones Industrial Average to a record. Dow Jones increased by 1.4%, and Nasdaq also increased by 1% yesterday. And all Asian markets and European markets had positive returns over yesterday and today. Of course, these positive returns are much affected by U.S. Fed's easy monetary policy for the next 2 years.
And Korean stocks recovering all of yesterday's losses and then some. The Kospi surging back today almost to 3,100 points with a gain of 3.5%. Similar moves on the other indexes. Tell us about the local markets.
As expected, inflation increases and U.S. Treasury bond rate goes up. There was a huge drop in domestic market yesterday with negative 2.5% return in Kospi. But today, domestic market fully recovered yesterday's loss with 3.5% return in Kospi and 3.3% return in Kosdaq. This quick recovery is also powered by Chairman Powell's easy monetary policy confirmed in U.S. Congress testimony.
Right. All right, Professor, we'll have to leave it there for today. Thanks, as always, for sharing your insights with us. We appreciate it.
Thank you very much.